Ladies and gentlemen, shake my hand. Welcome to another War Room number 78 on the 365 Trading Academy YouTube channel, where we map out swing trades, where I show you where I'm going to be buying and selling, why I'm going to be buying and selling in accordance to the rules of supply and demand, smart money concepts. That's what we do on this channel, and we've been doing this for quite a while now, just over a year. Thank you so much for everybody who's taken the time to like, share, and subscribe. I do encourage you to keep doing that, as I do my best to keep showing up with you with content that not only helps you learn about the markets, but helps you build your wealth. Right, so here's the link down below. Don't forget to check out these links and register for what applies to you. Right, I really prefer people focus on the first tab, right, because that's where you get all the basics. You really need to master the system of order flows, order blocks, types of supplies and demands, the rules of smart money concepts, where are the banks buying and selling, and all that kind of good stuff. You'll find it in here. But today, in today's war room, I just want to quickly map out what we're going to do together as quickly as possible. All right, I want to teach on two charts just for like 10 minutes. Right, I'm going to walk you guys through Bitcoin because someone brought up an incredible question. One of our registered students in the public Telegram group asked me a question that made me so happy because they're starting to apply the information. I can tell that, you know, it was well thought through. So I want to quickly look at the Bitcoin chart, but I'm going to give you guys a different perspective, right? So from our usual war room stuff, I'm still bearish, but I'm going to show you another way of looking at this thing in its most simplistic form. I'm going to look at Euro USD, and in that particular chart, I'm going to teach you why, as a swing trader, missed opportunities will cost you more money than stop loss hits, right? And I don't think people have wrapped their minds around this in trading psychology, right? So I'm going to explain that. And then for our signals for this week, I'm going to look at NASDAQ 100, the SP 500, Nifty 50, the Nikkei 225, or the Japanese Index 225, however you want to see it. USD Swiss franc, the USDZAR, the USDNOK, EURZAR, the DXY gold, NZD Swiss franc, Ethereum, AUDUSD, Platinum, which is XPTUSD, and finally, you know, the UK 100. So I'm trying every Sunday to like make sure there's a revolving door around assets that we might not get a chance to sit through week after week, right? But what you should be doing, not financial advice, but definitely what I do is every good swing idea that I map out, I put it on a journal, I put an electrical journal, and then on Monday when the markets open, according to my capital allocation versus my risk management style versus or plus how much I risk per asset in consideration with my maximum amount I'm willing to lose per cluster, I set pending orders, sit and forget. If all of that stuff just sounded confusing right now, on the 365 YouTube channel, go to the master spreadsheet video. Just type in on my YouTube page, master spreadsheet video, where I break down what is the maximum, you know, paid on an account. How do you calculate that? What does trading classify? If everything that I just say is difficult to understand, all right, I'll put the link up here for you. Just rewatch that video because I teach on that kind of stuff, right? So based on all those things, I set and forget. All right, so that's what we're gonna do. That's what we've been doing all year. All right, so let's quickly just jump right into, you know, Bitcoin first. Break down what the student asked in the public Telegram group, and then I'll do some teaching around it, and then we'll get into our usual signals, right? If you stick around, I guarantee you, you're going to enjoy it. Not only that, you're going to learn something and potentially make some money along the way. All right, so thank you again for subscribing. Please don't forget to subscribe. So we're back on the 365 public Telegram group. All right, so I'd very, very much, you know, advise you guys to kind of like check out this group here. Because, you know, we do quite a lot of work. In fact, the public Telegram group for me is less of just me dumping charts, but I really enjoy the questions, right? And I take note of them, and I do my best to come back to as many of them as possible. But Serene wrote this, which I found so interesting, and it's really based on, if you take our course, then you understand what he's talking about, right? But we're going to talk about a lot of things around Bitcoin and just kind of like map up the future of Bitcoin, which we've done quite well on this channel, and we've been very accurate about it, you know, right? So number one, he says, look, man, I think I just made a post of my NASDAQ sell here, and I think I just sent a screen grab of my real account and why I was still holding this big sell, right? I've been holding this NASDAQ sell since the 15th of August when I first came out and said I'm not buying CPI hike Yes, inflation is dropping, but it's still high. I explain all that kind of stuff, and therefore I maintain a risk-off sentiment despite the markets pricing in the fact that Powell is probably going to reduce the rate of which is hiking, which obviously gave markets hope here, right? Markets were very much bullish after that first CPI data drop, and I just warn people around that. And it's just one of those things that you see if you've been in the markets for a very long time. Like I'm clocking in at 9 years, right? So I haven't seen all the market cycles yet, right? But I do know for a fact that markets price in things, and so you can always predict the way human beings are going to think around it. And it's specifically smart money that you want to learn to predict, because smart money uses with the way they think, right? We call that conviction. They back it up with real money, right? So they pump the market in one direction, and then you need to catch it on the other side. So that's what I simply did. Maintain conviction. Sold on the 15th, and then with the Jackson Hole Symposium on Friday, we got this beautiful downturn here. Right, so that's kind of like the context of this conversation, where we're kind of like talking about risk off. And then Sarid asks, look, man, and then I shared a Bitcoin chart as well on the group, and I was explaining, like, look at all these charts. So this was before Friday. I sent these charts out. It was Bitcoin, it was oil, what's this, the DXY index, the industrial Jones. This is where NASDAQ was, and I kept making the point that, guys, be very careful. Be very careful with these guys. I'm pretty sure on Friday, and I put it here, Jackson Hole Symposium, I'm pretty sure it's going to be a bad day in the market. That plus Friday plus stock sell-off plus a lot of market hope. And when there's a lot of market hope, remember the imbalance in scale that I teach in Module 1. If too much money is weighted on the other side, we don't want to be there. We want to be where the imbalance is, because that's where most of the money is going to be made. But so that was the context of the conversation, right? And then Sarid says, look, man, I'm looking at Bitcoin. This is the Bitcoin chart I shared here. And listen to this. This is like, I love it when registered students who've done the course start to think around these things carefully. It's like, look, number one, we've got a major turning point. He's talking about the all-time high where Bitcoin capped at about 69,000 US dollars, right? And then it's like, if you think about the asset profiling, right? Bitcoin is generally a buy profile asset, but a cyclical crashes, right? Sarita, this is for you, man. So cyclical crashes, and when those cyclical crashes happen, we're looking at a range between 8 to 90%. Okay, that's a proper bear market, right? If Bitcoin falls for 10, 15%, it will make the news. Yeah, but it's not really the type of crash that most people want, especially long-term holders, all right? And then he's talking about there was an original turn, right? And that's kind of like when price turns, but there isn't a supply or demand that causes the turn, and so it's just an influx of a lot of funding, right? Money, either up or down, right? We teach on these kind of things. I'm just running through them as quickly as possible. And then it says number 4, there's potentially glass effect on the 17K to 19K level. So we're going to look at that right now, all right? And then there's a demand at 11.9K based on a recent body, right? We're going to look at that order block that he's talking about. Could the fresh touch produce a long-term major turning point, or maybe 1 or 2 months of buying? So check this trade out. He's saying, look, man, I'm looking at Bitcoin overall, and this is probably better, looked at it on the chart. But let's just get through this thing. But the last point here is like, there are short-term trades on the table. There are medium trades on the table. What's better? Do I look at where this asset is going long-term, or do I gamble on 1 or 2 months of a short-term, mid-term buy rally, even though I know there's potentially a glass effect, right? So glass effect for us supply and demand traders means an order block that is now being drained of money. And therefore, there's a high chance that it's going to break, right? In terms of smart money concepts, we are looking for liquidity. We're looking for places where most retail traders and stop losses are going to get hit. That's what he's trying to say. Now, please think around this in the war room. I'll be happy to hear your views. All right, so because I'm putting it all together. Lastly, Sarid, shout out, man. I appreciate when you guys do this kind of stuff, think through your stuff, and I really hope to do a good job out of that, right? So one more time, now let's switch over to our screen and then start to break down Bitcoin. Again, if you really want to understand what the student is talking about, hit this link here, register, and my team will get a hold of you as quickly as possible so you can start your journey, right? It's a full-blown market structured course on supply and demand trading. Really one of the greatest things I've ever done with my life is to finally record and put all this stuff together. Right, so on to the charts, ladies and gentlemen. Let's see if we can quickly break down Bitcoin. I have a lot of things to say about Bitcoin. I mean, I could spend the whole day, talking about this kind of stuff, and I'm actually running out of time because this is the last week of August. My goodness, and there's a big video I wanted to put out on Bitcoin, and so maybe today, if I don't get a chance to put out that video, I might as well drop it in the war room, which is unfortunate, right? Very unfortunate, because there's a lot of things I wanted to say. Right, so I'm just going to quickly pull out a Bitcoin. What is going? Oh, sorry, I'm still on the indices. Let's see. So let's start off with what Sarid is asking. Oh no, actually, let's start it off a different way. Let's look at Bitcoin from this perspective. Okay, let's look at Bitcoin from this perspective first. And I just want to map out some what I'd like to call common sense market reading. And I've been doing this with you guys for a little bit now in terms of scenario analysis. I've been doing this. Let's see if we can find a different Bitcoin chart. Just one more Bitcoin chart. Somewhere, anywhere. There we go. Let's try this one. I've been doing this with you guys, with Euro USD scenario analysis. Scenario analysis is pretty much a trading strategy that I've been developing for a very long time, just simply based on structure, market memory structure. It's not uniquely new to 365, but there are many things that a lot of people don't consider. This is Bitcoin on the weekly time frame. This is Bitcoin on the weekly time frame, right? So we can do, classical, supply and demand reading. I do not like this chart at all, right? This is on Bitfinex, but I don't want to go to the other charts where I've already marked up, markets just yet. But I want you to tell me what you see. When you open a chart, it's on its highest time frame. What do you see? This is a governing time frame. I've got so many screenshots of me engaging in public forums where I tell people Bitcoin isn't where people thought the bottom was 20K. I was like, no, it's not. Then they said, no, definitely. After 20K, it's never coming back down again. Oh, that's not true. That's not true. And they laugh and I take screen grabs. And I'm asking you, what do you see? Well, if you're not a registered 365 student, what have you been trained to see? What have you been trained to see this nonsense here? Is this what you guys were hoping for? Right? That there would be a strong enough support there and Bitcoin's going to go up. Is that really what you've been trained to see? Do you really see that working out? This is what you're trained to see. When you see a big chart monthly, one candlestick representing 4 full 7-day week volumes of trading, because remember, Bitcoin is traded over the weekend. Every single day, what do you really see? All right. So with that being said, I can tell you right now, I am not yet a dollar cost average into Bitcoin every month for my portfolio and then for my kids every month. I don't skip a bit. Dollar cost averaging means I don't care what the price is. On FTX and on Binance, I've been selling as a spot trader. The profits from long-term sales. And once again, guys, I told you guys to start selling Bitcoin somewhere in here. This is literally April this year. Sometime in February, there were multiple sales, but definitely here, I beg you guys to open and hold sell positions. In Euro USD, I'm going to show you the curse and the blessing of the swing trader. You're going to understand why. Now, when I see a chart like this, for me, it's going down. There is nothing in hell that is stopping this thing from going down. Our feelings can get hurt. Your investments can get blown not because crypto is fake or whatever. It's because your lack of understanding, right? A long time ago, many hundreds of years ago, it was written, my people perished due to lack of knowledge, right? If you don't know, you don't know. So you suffer the consequences of your ignorance. Now, again, I don't mind. It's my channel, right? You can tell me I'm crazy, but I absolutely guarantee you, Bitcoin one day, sooner rather than later, will end somewhere here. That's what this big chart is telling me. That Bitcoin one day, sooner rather than later, is coming between this range of 12,698 to 9,200, right? So that's the range. And I can tell you that Bitcoin has done this many times. It has honored what we call unfilled buy orders. All right? And I'm not here to teach too long. So if you want to get this information, that link, bro, hit that link, ma'am, sir, ma'am, hit that link, because it's absolutely crucial when Leroy is not there for the rest of the week. You are contemplating about these things. You can see them. Now remember, Sarid on the public Telegram group is talking about multiple levels. The first level he's saying is, look, man, I believe there's a glass effect. You guys remember what he said. And please don't get bored. I will give signals for the week and all that, blah, blah, blah. But this is it. I did a whole war room on Sunday and I said, look, the CPI, markets out opium, but I'm going to sell. I literally did this, right? So if you exited out of that video early, on Monday I wake up selling. I even went to post a long narrative of the public Telegram group, right? And now people are surprised, or some anyways, on why I'm still on a Nasdaq sell. This is it. This is the most important thing to listen to. I do the education stuff first before the signals, because really, if you could just stay focused for the first hour of the war room, that would be great. Now, Sirid said, look, man, about 19K, let's go to 19,000 to 17,000. There's a range. He gave us a range. He said, look, there's a glass effect level. Do you see this? This is 19,000. This is where Bitcoin is right now. And if you remember, I asked you at the beginning of this video where you trained to think that something is going to happen here like this. So that's not really a great representation, right? From this previous week of the crash, where you trained to look at a support. Because one of my 365 students is saying, I see what a lot of people are going to see. But Leroy, is that not what we call a glass effect level, right? So I'm just drawing the second level. He said between 19 to 17K. So this is it. This is what he's talking about. That and we're going to go down to the lower time frame. So somewhere in there, he's realized that there's something that a lot of retail traders have been taught to see and believe in. That's where a lot of people are getting liquidated. On Friday, 75 billion US dollars was liquidated out of the crypto markets. You understand what I'm saying? So, when they say people lost money, those who were buying got liquidated. Right. Now check this out. I think we're coming down. So now I'm going to drop to the weekly time frame with you. What do you see? So Sirid, now, this is where we are. Between 17 and 19K, I'm starting to see some order blocks, and I'm starting to see that these order blocks have run. They've run a bit. If you remember throughout the whole year, or at least in the last 4 weeks of the war room, we had an upward channel. Like, so we're going to revisit the channel. And our original projections were, price was going to struggle all the way back to at least 30K, and maybe deal with the resistance here at about 28, 28,500. This was the original trajectory. And then the opium drive actually cut traders short. Because if you're projecting to sell only then, right, there will be not enough liquidity anyway. There'll be too much competition in those areas. So the selling happened early, cutting off a lot of buyers out of that race. And that's what's happened now. And all of a sudden on the weekly time frame, I've got a new bearish engulfing pattern. Now, what do I know about my bearish engulfing patterns on the weekly time frame? I know that when they show up, they make damage. What do I know about my bearish engulfing patterns on the weekly time frame? I mean, I'm not doing anything crazy. I'm just showing you what's on the chart, right? The scenario analysis, understanding your chart holistically, dating your chart, getting into a courtship, really getting to know the crust of this thing. Bearish engulfing pattern gives me that type of an impact, right? So I get a bearish engulfing pattern. Sometimes I get some type of consolidation. I get a bearish engulfing pattern, a drop, some type of consolidation. Another one, bearish engulfing pattern, a drop, some type of upward consolidation. So what's going to happen, right? So when I see this stuff on the weekly time frame, I'm like, is it really time for me to take a bet? Really, that's the question. Is it time for me to take a bet with my own money and assume that the market is down falling because my emotions are worried about my long-term investments? But if they are long-term investments, why am I worried about them today? You have to think about that. But if you're strictly a trader, you really have to look at what your chart is telling you to do, right? So there are a lot of people who've bought down here. A lot of people are going to keep trying to buy down here. But on the weekly time frame and now on the monthly time frame, I'm starting to get the sense that buying is more risky than doing nothing. All right, number one. Buying seems to also be more risky than selling. So I am inclined to hold on buying here, what Sirid called a glass effect level. Yes, we could get another tap, right? We had only one good touch on the zone, and then market set on it. Well, in supply and demand, that's a problem, because if price doesn't leave an area of value immediately, what's happening is those orders are being matched. You're getting buying and selling, which creates glass effect that Terid brought up. It makes means the area is becoming weaker and weaker. And that area here was fundamentally for buyers, which means more buy orders are being used at this moment. This is a weekly time frame. Think about it. A lot of buy orders were used for a month. One candlestick here represents 1 week, right? So you got 4 candlesticks sitting. There was buying and selling on a buy order block, which means by the time the buyers took over, by the time they finished the war with the sellers, by the time the buyers said we're holding this support or whatever you want to call it, right? They ran out of steam. There was no longer enough money because a lot of buying and selling happened at that level. And so the sellers come back down again, driving price down. Now, on the scale of probabilities, exist 2 scenarios always in trading. There's always 2 scenarios in trading. But what you want to do is try and find the highest probable course. Scenario number 1 is this, right? Double bottom, right? It's a common, chart pattern, right? So this could happen. This could happen, in the next week or 2, right? Markets could come back and boom, we're on our way up there. And if you watch my latest smart money concept video that is scheduled to drop this coming week, you learn a little bit about these things. Right? I'm trying to drop this information, as we go along in preparation for module 3, right? So this could happen, right? This could give if there's a probability of this happening. And this is the type of trade I want to be in. Not really, personally, not really. Why? Because I know there's a little bit of sell pressure there. So even if there's a buy side, I know where it's going to end. And the Cyril is saying, look, man, would we take it? Could a fresh touch produce a long-term or maybe 1 or 2 months of buying, right? Could we have a little bit of buying somewhere here, right? This is a couple of weeks. Look at this, is the weekly time frame, guys. So that's 1, 2, 3, 4, 5, 6, 7, 8 weeks. This was just 2 months of Bitcoin trying to, scale up. And those 2 months, which is 8 weeks, was wiped out by 2 weeks of selling. I'll say that again. 2 months or 8 weeks of buyer's momentum was wiped out in 2 weeks. Sell side momentum is very strong, all right? And it happens so quickly with risk-sensitive assets. So there's that option. But even me now, when it comes to buying, I'm like, okay, cool. Now, as a supply and demand trader, when I see a bearish engulfing pattern, I generally believe that there's always a probability. Normally, in currencies, even in crypto, normally there is a probability that my bearish engulfing pattern will get retested, and then markets will have to go up to it, test it, and come back down. But when I look at my specific chart Bitcoin, I notice that, man, Bitcoin don't care. It doesn't really come back. It really ever allows you to get the opportunity. So you miss it once, you miss it, right? You miss it once, there you go. You miss it. The price never visibly, at least on the weekly time frame, comes back to retest these zones, right? So you miss it the first time, you've missed it. Think about that. So again, for me, as a buyer or a seller in this market, I don't want to gamble too much on the fact that it's going to be buying down here, and it might still be a classical retest for more selling pressure, because sometimes on these charts, buying doesn't even happen, right? Bitcoin seems to really not have time for these retest zones. All right, that's fine. Keep it moving, right? So this is what I'm on the weekly time frame. Now I'm going to draw down to the daily. This is very important. Now I'm looking at the daily and I'm thinking, this is interesting, because I've broken this chart down, from monthly, weekly, daily. And this is what it looks like on the daily. When I zoom out of my chart, I start to notice patterns. Wait a minute, there's a buy rally here, there's a drop. There's a buy rally here, there's a drop. There's a buy rally here, there's a drop. There's some type of consolidation, there's a drop. Wait a minute. Okay? And then my mind starts to think, geez, if this has been happening so consistently, how are traders not seeing it? There's another trading school out there in the world. It's called Falcon College, Falcon, I don't know, Falcon Trading Academy, Falcon something. But basically, these guys just love maximizing on chat patterns. All right? I read a lot. I really use my brain for a lot of things. The last thing I want to use my brain for is, memorizing different chat patterns. But what chat patterns do is they simply play on market memory. Market memory is human repetitive behavior. Humans are trained to see specific things and they react in a specific way. 99% of us, when driving on the road, when we see a red traffic light or a red robot, depending which part of the world you come from, red means stop. 90% of us are going to stop. The 10% are normally just drunk or high or just crazy. But most of us know when we see a red robot, we are going to stop. So that is prediction of human behavior. When I'm driving my car with my kids in the car and on the other side of the road, the robot is red, I hardly ever generally go into a panic mode that other licensed drivers are going to create a crash. That's what pattern trading is. Pattern trading is, look man, as long as 90% of traders see the same thing, we are most likely going to get the same reaction. So everything that I've said about Bitcoin, I want to move on to a chart that I already worked out for you. I want you to see this. This is the same chart, but we've now discussed how I've broken it down from monthly. This is literally on the daily time frame. So all I did was mark out major turning point. Seri talked about that at the beginning, right? The highest point on the chart where Bitcoin traded about 69,000 US dollars. And I'm trying to see, I know retail traders want to think to go to the moon, but what's the logical pattern of human beings? All right, what's the logical mindset of retail traders here when looking at Bitcoin in front of you? What do you guys see? Check this out, man. This is literally last year, July 2021, with that crazy bull run, which was based off a weekly demand. And I've warned you guys about our notorious weekly supplies and demands. Now, markets really like crazy, all the way to an all-time high, and then start to break. All right, I'm going to zoom in. I'm on the daily time frame. This is, please, tap in. Stand up, pause the video, go drink water, get some Red Bull. I need you here with me. This is literally played out really. And this chart is talking to you or talking to us. Now, watch carefully, right? We get the usual ascending trend line. We get the usual 1, 2, 3 taps. We get the usual basic technical analysis stuff that people, always peddle out there. And then all of a sudden, there's a break. All right, so the first break is last year, December. Who called this stuff? 365. I told you guys, as long as Fed started talking about tapering in November last year, tightening monetary policy for the following year, markets were going to crash. Then I say lost decade. And then I played you guys the Ray Dalio's video documentary about changing world order. I've been preparing you for this stuff. And then a war came out of nowhere in February, right? Like a catalyst to already a very infused situation, which then threw inflation into the air, which literally doubled the crisis. And so everything, technically speaking, fundamentally, sentimentally, technically speaking, was aligned to one side because smart money, a big pool of money, was pushing price in one direction. Now, all I want to do, there's a function somewhere here on TradeView, and it's called Ghost Feed, right? So I have it here. But if you play around with your TradeView, you will find it somewhere. I mean, I won't have time. I'm going to try and find it now. But if I give up, I give up. I don't know, man. It's somewhere in here. It's called Ghost Feed, right? It's just a simple, trajectory type of pattern. Ghost Feed, there it is. Ghost Feed, there, right? So where you would measure your long, short positions, there's Ghost Feed. Ghost Feed allows you to print patterns and then almost predict them, right? So we're literally just plain and simple technical side. I have to zoom in quite a bit so that I can get a clear line. So before I zoomed in, I try to draw my trend lines or my channels as accurately as possible. This supply I did so many videos around, so I told you game over. I say if we break here, we're breaking 30K. I don't care what anyone says. We broke 30K, we didn't care, and we're going down, right? And that's what happened the whole year, right? Whatever. Now I'm gonna pull out my Ghost Feed. And all I want to understand is the distance between the break of my correctly drawn structures and the distance, because as a seller, I've been selling these breaks. I notice where markets are going to break off. I must predict how long I'm going to maximize on this trade based on human predictable patterns. At some point, they're like, oh, stop selling, it's time to buy, right? The robot turns green. And when the robot turns green, cars start to move. And when patterns switch to green, traders stop selling and they want to buy. So I want to know that distance, right? That's all I'm doing here with you, right? So I'm going to take my Ghost Feed and I'm going to draw it. I'm going to literally copy, drag with my mouse, and I'm just simply drawing point A to point B, structure to structure. I'm like, okay, cool, right? It's not meant to be 1,000% accurate, but it gives me a good, clear vision. And then I'm like, so this was the break of structure on the 3rd of December, 2021, and this pattern lasted until the 22nd of January, 2022, and then with another upward, ascending, channel, which I told you. You see, upward ascending channels, knowing supply and demand well, you know that to sell, capitalists will always want to sell high. They will always want to sell high. So what do? They have to push price a little bit higher before they drop it. So I take my pattern, right? After this channel has been established, I have to wait for it to be established, and then I start to project. I wonder what would happen if markets were to break out of this structure. Lo and behold, look, let's zoom in, let's zoom in, let's zoom in. You guys saw, I didn't change anything, right? I simply took it from where, let's do it again, because I want you to see it, number one. Number two, I don't know if I'll ever have time to come back to this. I am simply dragging this to the next breakup structure to understand the distance. All I'm doing is pulling it. I'm not increasing it, I'm not adjusting the size, and I'm just gonna pluck it here. All right, so all of a sudden, the same trajectory in price happens, because even though it's not a perfect match, we can see that from the breakup structure to the touch here, that's where the drop ends. I'm like, okay, that's interesting. So I sell. I sold with you. We spoke about this on the channel many times, right? So that worked out just fine. Great. And then I'm going to take the exact same thing now into today's pattern, right? So then with this new channel here, with the market opium, and I'm just simply going to put price right there. So now, and this is where price is now, right? This is where price is today. Price is currently, as we speak right now, on this beautiful Sunday morning, breaking out of this thing. Broke out actually on Friday, Saturday, and now we're looking towards what's going to happen for the rest of the week. And all I'm doing is zooming in. I don't know what's going on with my web camera there, but we will continue as is, right? Let's see if I can. All right, so fine. You don't need my face right now. I'll do it that day. Let's check this out, man. Look at this. So all of a sudden, the same pattern that's been very consistent since December last year is saying, Leroy, Sarid, 365, hello, there's a high chance this thing is going to end up here. If we're looking at it, and wait a minute, it's the 12,944 level. But didn't we figure this out at the beginning of the video or this video earlier on? Is it the same place we spoke about at the beginning of this video? When I was at the monthly time frame? When I was at the monthly time frame, did I not say, for me, what I'm trying to see is that we still have a long way to go. For me, remember, I came to the monthly time frame. I don't remember which chart we used. Was it Binex or Bitfex or whatever? I think it was this one. Did we not start this video this way? Right? We did. When I started my Bitcoin analysis, I came to the monthly time frame first, and I asked you, what are you trained to see? On the monthly time frame, when we're breaking stuff down, we say, to me, it feels like Bitcoin is going to come at the 12,000. Remember this. It just happened like a few minutes ago. And now we've broken it down to the weekly, we've broken it down to the daily, and we have used a ghost feed to measure the repetitive pattern of retail capitulation, selling pressure since last year, June 2021, and it seems like the sell-offs are happening at the exact same amount of points, pips, distance, etc., etc. Why is my network acting so slow? But you guys get the point, right? So for me, again, I'm still holding very steadfast on this, type of perspective. I don't care how long it takes, right? You could have one full green month within, the crypto pool, and the whole world now thinks the bull run is back and the bears are done. And I'll come to you and I'll tell you that, look, there's a high chance that is a bear rally. What's a bear rally? A bear rally is simply, some buying momentum that can be midterm, last for days, 2 weeks, all right? But it's all going to get sold off anyways, right? That's what a bear rally is, essentially. Right, so now back to the daily time frame chart that we're looking at right now, which is where we've drawn our ghost feed, and you can see it's coming back, literally coming back to where we were, or where we were. And that's just a little perspective I'd like to share with you. The last thing I want to share with you when it comes to Bitcoin is, please guys, pray that I have the time to make a comprehensive video of why I think crypto is going to crash even more. I've been saying this in all my forums. End of August, crypto is going to crash. End of August, crypto is going to crash. Friday kicked us off. So I think there's something big happening this coming week, and I really need to make a video around this stuff. But look at the previous questions, the daily time frame. I've already marked them out for you. Between essentially August of 2017, Bitcoin rallied all the way to about the 19,000, just under 20,000 USD mark. It was really where the whole world woke up to crypto bad news, woke up to crypto crash. Everybody thought because of this it was a bubble. You know, again, you only know what you know. And because you only know what you know, you only operate at that level of knowledge, right? So if you know very little, your opinions, your assumptions, your analysis, your trading discourse, and how you move with your money is always going to be based on that cluster of knowledge. You will think you're the king of it all until markets prove you wrong, because you're operating at limited resources. Once again, my people perish due to lack of knowledge, right? So there was this big downward drop creating a massive, I could draw beautiful patterns where I could draw multiple daily supplies. I could show, again, remember Cyrille's words, major turning point. In 2017, this was a major turning point. All of this had not yet happened. Bitcoin found a floor. The drop was 84%. The drop was 84%. Bitcoin came COVID. We fly to safe haven. I kept telling everyone, buy, please, please. At 3,000, 3,900, 4,000 US dollars 2 years ago. This is not 10 years ago. 2 years ago, Bitcoin was at about 3,900 US dollars. It went to 68. Right? It's up to you. Right. So between then, crypto markets crashed 72%, and in March 2020 of the COVID, the rally created a massive break of structure. And now this is where we are today. You see this green dot from the major turning point or the all-time high of Bitcoin. Bitcoin has dropped only 70%. Right. So we could have a minor turn like this, which is about a 72% run, right? Which I don't think we're going to get. I think we need a full 80 to 90% correction. I repeat, I think we need a full 80 to 90% correction, a full 80 to 90% crash. Now, if I was to just extend, we've got a gold speed, we've got an order block, we've got that monthly demand zone that's marked out here. If I was just to extend to see where is the 80 to 90% crash in the markets, I'm just extending an info line. Okay, at 81%, if Bitcoin was to crash at 81%, it would arrive at a monthly order block. That's confluence on top of confluence on top of confluence, right? I'm moving on. I hope you got something out of this. I hope this helped you. EURUSD, I spent so much time on Bitcoin. I'm unfortunately not going to give you everything I wanted to give you when it comes to this chat, but I've been preaching EURUSD for scenario analysis for a very long time. Look what I did for you yesterday. This is literally the curse and the gift of a swing trader. There have only been 11 perfect EURUSD swing trading moments in this chart since, I want you to understand this, since May of 2021. When I'm looking at break of structure, confluence to the order block that created a supply zone, and price running back up. Since May last year, one all the way up there that created the zone, so you would not have been in the markets here, because that's for the banks, right? I teach on this stuff a lot in the module, right? You would have gotten a safe entry there, priceless. And then here, there, 2, 3, right? 4. I've done this in my scenario analysis videos, guys. I'm not wasting time on this stuff. Please watch the videos on the channel. I've done this on my scenario analysis videos. Right, 4, right there. 5, all right? Some of the bearish engulfing pattern, meeting a bearish engulfing pattern, that would be a clean entry. I'm talking about entries that we have no choice but to take, because we're swing traders who use supply and demand are based on rules. The opportunities are not thousandfold for swing traders. This is the point of this video and the point of my words. Missing an opportunity in the markets is the same, technically speaking, as taking a loss. I'll tell you why. You don't know the day you're going to have a bad trading day, because those days are common. You don't know when you're going to have a bad trading week. You don't know when you're going to have bad trading weeks to months, where your P&L is just being hammered and hammered and hammered because your psychology is off, or your strategy is not aligned, or your understanding of what's going on is off. That means you absolutely cannot afford to miss out opportunities in the market. You need to tell yourself that, which is to say, even though there were 1,000 intraday sell opportunities on EURUSD, which we've covered throughout the duration of the years together, right? When it comes to perfect swing entries, where you ensure to get an entry, never get stopped out using supply and demand, so far from May last year, they've only been 11. And some of them, markets have not yet even returned. So even though I'm counting 11 opportunities, 1, 2, 3, 4 out of the 11, right? 4 out of the 11, which is what? I don't know, 10, 9, 8, 7, right? About 7 to 8 of those opportunities, 6 to 7 opportunities have not been used. So they've only been technically 7 usable swing trade opportunities on Euro USD since May last year. Only time you could have made perfect risk-free money. Yes, on the intraday, smaller time frames, you could have made many entries. I don't want you guys to miss what I'm saying. What's important is that stuff that I showed you last time on the public Telegram group when I was making an analysis on EURONOK, right? You remember this? When I said my trading journalist told me I've missed trades like this at least 9 times out of a trade instead of 34. And therefore, that becomes a big problem. Because if I'm missing these entries, if I'm not being triggered into these trades, remember I missed this? I wanted to sell in the yellow zone, and what price did was price chose a lower supply and left without me. I didn't lose money, that's fine, well done, but I didn't make money. And so I could have been part of all of this massive, beautiful, big movement because we already profiled the asset correctly. We already knew where price was going. We knew it was a sell. We were not confused like most retail traders trying to buy things when it's time to sell, or sell when it's time to buy, or stare off a range in market. We knew the direction very well. But what we didn't understand was how intense the competition was for the banks to sell and reduce the exchange rate immediately. And so while you didn't take a loss in this particular trade, the missed opportunity for money here is dangerous because you don't know when you will need this capital buffer. All right, so just like Euro USD, stop missing these opportunities. Please, please take this seriously. Right, just like Bitcoin, get a better understanding of where price is going. Don't go with social media. Don't go with the masses. Really learn to think for yourself, right? And I couldn't think of a better way, ladies and gentlemen, than putting the link down below and really thinking through these things the way we teach them, because we follow institutional strategies, right? So my name is Zero J, it's my series, and now I would really love with all my heart to get down to the business of the day, which is to look at a couple of signals as quickly as possible. I promise not to take time. I won't be doing any teaching. I just want to run through these charts with you. We're already in NASDAQ, we're already in S&P 500 anyways. Well, those of you who follow me quite well, right, we were points of interest in DXY. I made a social media post on Instagram. Please follow me on Instagram and the 365 Facebook page. Fundamentally, not because I want to be popular, but because during the week, I give you guys sound bites. And I told you that the whole world is trying to buy gold, right? I looked at 2 sentiments, right? 2 retail sentiments. One said retail traders are 50-50. The other one said 57% of the orders in the market are not to buy gold. Be careful. I believe gold is going down, right? Why? Supply and demand, dude. Supply and demand, right? So I'm going to show you this kind of stuff before we start, all right? And we're going to go through all these assets together, and then we're going to call it a day, all right? Instagram, right? So every day, one more time, our trader's affirmation. Every day and every way, I'm getting better and better as a trader. Every day in every way, I'm getting better and better as a trader. Become better, right? How do we become better? One more time, as quickly as possible. Rules. You must have rules, right? Well, if you don't choose to join 365, you're still going to need rules, right? Your rules must cover your entry, your exit, your reason as to why you're entering, where you place your stop loss, your risk to reward ratio. You must have basic rules like that. At 365, we offer a complicated, long list of rules that come together like a beautiful jigsaw puzzle for consistent profitability. My entire course is about rules. Each rule builds to another rule. How many types of supplies and demands are there? How do they work? You must have rules. That's how you become better. Number 2, attend stuff like this, forums, right? Get to read more. Read. Avoid, quick noodle stuff, not those stupid free PDFs. Invest in your knowledge. Sometimes you're going to have to go buy a good book versus a poorly written, grammatically errored, stupid PDF on the internet. Sometimes you need to realize that if it's for free, it probably has no value, right? Nothing with value comes for free. Start to invest in yourself to become better. Most importantly, discipline. Y'all are not disciplined. You can't stomach the fact that you have no choice but to go 0.01. It annoys you so much. And that's because you spend so much time on social media and you get fooled by demo traders who are using big lot sizes and you think your life is going to change. Be disciplined. I had 0.01 trades for 365 days and I still managed to get a better life out of that. I still managed to get myself out of debt. I was consistent. Do you know what 0.01 on NASDAQ would have done for you? Do you really think, do you think through these things? 0.01 on EURUSD on the first 2-3 cells that I showed you in the daily time frame. 0.01 on the Bitcoin entry at the beginning of this year. Your life would be 10 times better. Your trading psychology would be well managed. Your capital would now be the capital that allows you to trade at a bigger lot size. Stay disciplined. Every day, in every way, I am getting better and better as a trader. Right, so the passion is going to slow down a bit. Let's get into chart. So the first chart we're going to look at is NASDAQ 100. Unfortunately or fortunately, if it's your first time joining us for a war, then you're not in it with us. And it's a dangerous time now because markets have ripped a new one. And man, I have no choice but to do this stuff. So I've got this article here on Friday. Been telling you about Powell, been telling you about the Fed. I told you guys about the political games that these guys are going to start playing. Right? I told you about the Democrats. I told you about Biden. I told you guys a lot of stuff about political ruling elite. And this is from CNBC straight after Friday when Powell gave his talk at the Jackson on Symposium. I want to pull out a few things. So pull out a few things. If you're bored and you know you're gonna click out of the video because YouTube tells us everything. It tells us when people come, their retention, when they leave, and it's supposed to make us better content creators. You know, do what people want, Leroy, and I don't. I will never do lifestyle content. I'm never gonna cut down on the education because you can't concentrate for more than an hour to get signals that you want for free that I don't sell. I'm not going to do this properly because for the power of one, for the 10 people who watch the full video, I know they are getting better and better as traders. That's just how I operate. I built my academy on the power of one. We're not that big, by the way. I only have 109 six-figure traders that are created from scratch. And overall, the academy is about 300 and something people. But I started off with just one person. So the principle of the power of one for me is impactful. I don't do marketing. I no longer do ads. The people who join 365, 9 out of 10 times are referred to by someone inside the academy. The academy is real, join, and that's it. So I'm gonna stick to the process. Right, so check this article out with me. Because you guys don't do this stuff and you still want to become rich. And I want to do it for you to help you develop the muscles. You must love your markets. You must be obsessed about this stuff. You must want to know what the hell did the most powerful person in the markets have to say on Friday to cause markets to shift. Even though Leroy told me he was going to do this 2 weeks ago, right? So I don't know. Right, Powell warns of some pain ahead as the Fed tries to bring inflation down. Pause, wait a minute. When we told 2 weeks ago that inflation is dropping, wasn't the same Powell in the last interest rate hike meeting telling us that there's no such thing as recession? Didn't he say don't worry about it because the economy is fine because we're looking at job numbers? Now Powell's using the words pain. All right, cool, Powell. I like the game, man. I like the game. Now we're not going to read the whole thing, right? I'm going to read what I think is important, what if I can remember. The Federal Reserve Chairman Jerome Powell delivered a stern commitment. Right, guys, this is about sentiment. Sentiment is key in the markets, man. Sentiment is the tone of the institutions. But if smart money says it's bad, whether it's bad or not, it is going to be bad because it invokes fear, creates volatility, and before you know it, if you're on the right side, money comes to you. Right now, you know, he said, look, delivered a stern commitment, right? A stern. This guy was about to slow down Fed rate hikes the last time we spoke. He was positive and optimistic. He kept saying the economy is doing well. I live stream these talks for you all the time. Please remember, he was not stern last time. Last time he was optimistic, very, 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 very sure, to a point where he ridiculed the very idea of a recession, even though the next day GDP drop or proved him wrong. Now, delivered a stern commitment to halting inflation, warning that he expects the central bank to continue raising rates in a way that will cause some pain. This is crazy. It's like, in March, I told you I'm going to break demand. And then I told you I'm going to keep breaking demand. And then I said we've done a good job in breaking demand. We're starting to see the positive effects, but the interest rate impact lags. So there's going to be more lagging in the economy. So we'll see how it goes. But I think we've done a good job. That was the last time we spoke to everyone. Now he's saying, oh no, we're going to cause more pain. Like straight. Like I'm not hiding now. This is after a crazy bull run and a much anticipated annual policy speech at Jackson Hole. Powell reconfirmed that the Fed will use our tools forcefully. What are the tools? Monetary policy, rate hikes, forcefully. Guys, man is cooking for you, man. Forcefully to attack inflation. Now we need to attack inflation that is running at its nearest high level in more than 40 years. In the public telegram group a week ago, when I was on the 15th of August, when I posted my thesis of being bearish, I remember one of our registered students, I think it was Alvin, he was like, you know what, this is crazy, man, because even if inflation has dropped, he was referring to CPI data, which I completely agree with him. Inflation has dropped, it is still crazy high. He literally said that, it is still crazy high. And I was like, absolutely. Because there is no ways we can, I'm just trying to see if I can find it, if I can, because honestly speaking, if I can't find it, you know, we'll move on. But I know it's there. I know it's there. Yeah, I found it. I found it. Can I just quickly share my screen? I don't think I'm making this stuff up. By the way, this public group is for free. Like, you literally can become a part of it and meet these awesome human beings, which I've grown to just love as family, you know, over the years. But check this out, man. He's like, look, I just posted my war room video. I hope I'm sharing this thing. You can see this is on the I can't see the date, but it's probably around the 15th. He's like, look, Leroy, hi. What data points do you look at? Because even if inflation is lower, it's still high. It's still high. We still follow the rules, but as a general guide, which data must help? And this was based on what I just said. I told them that, look, man, I'm not buying this silly data, right? This is literally me on the 5th. I'm not buying silly data. I'm risk on. And now all of a sudden, Powell is coming back now, you know, 2 weeks later saying, look, at the end of the day, as far as I can tell, inflation is at its highest level in more than 40 years. Duh, we all knew that. You acted like it wasn't. You, sir, acted like it was not a problem. You kept saying it's transitory. You kept saying we're going to get a soft landing. You literally did this. Now all of a sudden, you kind of like, you know, had a cup of coffee. Now, even with a series of 4 consecutive interest rates increasing totals to 2.5 percentage points, Powell said no place to stop or pause. Remember, markets price in everything. Price is everything. Market price in everything. The Fed said there is no place to stop or pause, even though benchmark rates are probably around an area considered neither stimulative or restrictive. What does this mean? Remember, he kept saying we have now arrived at a neutral rate. Neutral rate means, look, we've done our job. We've increased it. Problem solved. Now he's not even using the words neutral rate. He's saying even though benchmark rates are probably around an area considered, it's neutral. But look at the words, like not stimulative, it's not going to push growth, but it won't reduce it either. While interest rates, open quotation marks, Powell's words, interest rates, while higher interest rates, slower growth, and softer labor market conditions will bring down inflation. Softer labor market conditions. Is that what we have? What I've told you guys many times. Look at all the NFPs this year. Hottest. Right. The last NFP data we had in the first week of August doubled the expectation. These guys thought they were going to get 260K jobs. They got 500. This man is waiting for softer labor market conditions. Wait a minute. The same Powell who kept bragging about labor, he kept saying it's the best. Now we need softer labor conditions to bring down inflation. There will also be some pain to households and businesses. Stocks are businesses. NASDAQ is an index of 100 tech stocks. Businesses expect more pain. he said in prepared remarks, these are the unfortunate costs of reducing inflation. But a failure to restore price stability would be far greater pain. I'm not even going to bother with the rest of the statement. The Dow fell 1,000 points. We made a lot of good money on Friday, but it's not because of what it did on Friday. It's because we're in the markets already as a swing trader. We were in the markets 2 weeks before this happened to anticipate the catalyst. We don't trade the news. We simply trade supply and demand. When these guys show up to align themselves with their own market, we then make more money because of that. And that's what happened. The rest of this thing is a long history of blah, blah, blah. The last thing I want to show you before we get into signals is what Powell is saying to you from a graphic perspective. I don't want these guys to get away with treating us like little kids, because we are not. You know, it's the weekend. My boy's not allowed to play video games during the week because of school and stuff. But my goodness, sharing the bandwidth with him is annoying. It slows down my network, but yeah, it's fine. Right, so check this out. Check this out. I want to show you guys this one short little thing. Right, this is the last thing I want to show you. This is literally U.S. inflation rate on month over month. I want you to hear me carefully, man. I wish I could draw all over this thing on a PDF. I don't know where to get my mark pen. If I could download a PDF, I would. But it's fine. Look at this inflation that we are talking about. Let's look at from last year, October, 6.2, 6.87, right? So this is because of COVID, supply chain issues, inflation kept going up. 7.9, 8.5 for some time this year, right? This is January 2022. Right now, remember, during the Fed rate hike, the first one we had was March. Guys, please focus. January, February, March, April. In March, with our very first 0.25 basis point rate hike, and inflation dropped from 8.5 to 8.3. If you go back to the charts, you'll see there's a crazy bull run. People go, it's over, it's happening, inflation is coming down again. Then it's like, yeah, no, but the war, yeah, no, but commodities, yeah, no, but oil. There are all sorts of things, and inflation. So this is normal for inflation to be at a peak of 8.5 and drop to 8.3. And during this month period, for traders to price in the wrong thing because they are not thinking. And then the next month, it went up to 8. So people are like, oh, damn. Well, what does that mean? And then the Fed, hike was like, okay, we're going to go 50 basis points. No, we're going to go 75 basis points. And then we got 9.1%. And people were like, okay, it's peaked, right? It's done, it's peaked. And then it dropped to 8.5% in July. And then people at that bull rally that they're paying the high price for right now. Be careful. Because the article that I just read you right now, Powell is saying, if you want pain to stop, because we do, this is what we have to do as the Fed. We cannot at all, despite how we lie to you sometimes, we cannot rightfully so, because history will judge us, pretend as if that's enough. Inflation is at 9.1%, that's a peak. And then it drops to 8.5%, that's great. But we cannot pretend that this is enough data for us to stop increasing interest rate hikes. What the article just said. More pain is coming, because for me to stop increasing the rate, I need to see this now. The next data point, CPI, is for September. We need to see this. And that's not enough for the Fed, because remember, they need this thing back at 2%. Ladies and gentlemen, stop smoking opium. 8% is still high. Yes, the Fed needs to see a gradual downgrade. Yes, this is good for the market. Yes, we can buy there. I'll buy with you if we see a consistent downgrade. But right now, Powell is saying it's way too early. I know I made it feel like it's not, but it's way too early. Why? Because this is very possible. 8.5 or 8.8. Ha! It's just a fake reading for the 1 month, or 8.5 to what? 9.2. What are we going to do then? Right? He doesn't want to slow down right now. So he's saying, look, man, I'll see you in the 20-something of September, all right, when we do the next Fed rate hike. But be very careful. Be very careful that when we get the new NFP, remember I said one soft job numbers, and we get the next CPI in September, before the Fed rate hike, I anticipate we're going to have more pain. So maybe we're looking at another 75 basis point rate hike. Maybe. I don't know. There's just something I've remembered that I wanted to show you. One more last thing about the beauty of mastering scenario analysis. One more last thing about the beauty of market scenario analysis. Let me just quickly show it to you right now. Right now, if I come here, what's happening? What's happening? Right. So this is the NZDCHF 100. I'm gonna share it with you on the screen. Right. This is NZDCHF 100. Right. There we go. Now let's quickly find out exactly where the Fed's gonna sit down and have this meeting. Signals are coming. Don't worry. I'm gonna put chapters. You can even skip the market education. All right. And when you don't know when to get in and get out, it's not my fault. Signals are coming. But I want to see if I can add one more thing, one more layer to scenario analysis. Just study your charts. I tell people all the time, you want to be like me, study the charts. Don't come study me. Don't like. I'm just a human being. I make mistakes. Study the chart. The next Fed interest rate decision is 3 weeks from now. After Friday, right? After Friday, you can see that most people are really anticipating the rates jumping from 2.25 to 3 to even. So people are like going, man, we're probably going to get a 75 or 100 basis rate hike on the 21st of September, 3 weeks from now. How much time is 3 weeks, guys? Like 21 days, roughly, right? 21 days plus 3 days. So let's call it 24 days. So roughly a month from now. A month from now, right? Let's just quickly go back to Bitcoin. I mean, you do what you want to do with this information. Well, what's the chart we use for scenario analysis on Bitcoin? It's Coinbase. Yes, it was. Yes, it was. So we've got 3 weeks from now until we get another reading. 3 weeks from now. So I did the ghost feed one more time, just a quick recap for those of you who got bored and zoned out. I simply did the ghost feed to anticipate continuous pattern on price that markets seem to be moving and breaking in a very similar structure to give me confluence of my trades. So I'm going to hold on my spot trades on FTX, Binance. I don't care how big or small. I'm not going to go into how much. I'm just going to hold my trade itself and use that profit to buy Bitcoin when we get to the time for investors to strike. You write the notes, man. It's up to you. But now I'm interested to see that the next Fed rate hike meeting is in 21 days from now. 21 days is 3 weeks plus maybe another 3 days. So that's what did we say? 24 days, 25 days. So roughly a month. All right, that's cool. I'm gonna just browse through something here. You see this bearish engulfing pattern there? That happened on the 5th of May 2022. Can you see that all the way down there? 5th of May, 4th of May 2022. You see the next bearish engulfing pattern there? 16th June 2022. So that's roughly a month. You guys are not hearing me, man. You guys are messing around. I'm saying this was a month, roughly, right? From 6 May to 16 June. Had it been from so about 20-something days. Are you guys hearing me? You guys, I hope you're hearing. All right. Maybe they hear. Maybe they are. Right. Here we had the 3rd of December, all right, this break of structure, all the way to somewhere here, which is the 5th of January. The 3rd of December to the 5th of January. You guys hear me? That was like roughly a couple of, also almost 30 days, right? Just 20-something to 30 days, right? Where markets consolidated before doing this. Do you guys get it? Do you guys get it, man? Do you guys get it? Do you guys get it? Do you guys get it? I love the markets, man. I'm gonna stop toying with you. You do what you wanna do. If you've enjoyed me so far, please don't forget to like, share, subscribe. It's absolutely crucial. Let's get into the business of the day. NZDCHF 100. You're bored with me. I know. I've lost retention. It's fine. I don't care. I just want it on record that I told somebody. Right, NZDCHF 100. Right, if you're in, you're in. If you're out, you're out. Right. And if you're trying to get in, watch out. Like I said, the trajectory of the stock market predicted largely by how crypto markets end today, Sunday. So you want to watch out for this. There is some type of opportunities that exist in here. The sell pressure zone because of how shocked the markets were, which was stupid, right? Wall Street was like literally like on that opium, right? And you will always get crushed on the wrong side of trade, right? So now that people now know Powell's hand, right? We want to see if he's going to get a play. Be very careful. The area of competition is very, very tricky. It's so tricky, man. You'll be waiting for an entry at, say, 12,900, and markets will turn just before at 12,800 using the wick of the final green candle right there. So there's nothing I can do about that except to understand that markets have become more sensitive ever since I started teaching this thing over time. If you use the Akini-Hashi candlesticks, you'll notice that you still have this type of formation here, which is not really a great bearish engulfing candle. So just watch out for this opening, right? I'm really, really, really telling you that you should have been in much earlier, right? So I have nothing to do with this zone. To be honest with you, it's just me. If I want to add another entry, maybe, but I have no desire to. I have every single desire to manage my trade, to maximize it. I will most likely be looking to get out somewhere here just before this area of 12,300 if you're a seller with me. And I'm not saying that's a good place to buy. I'm simply saying that's a good place for me to close this 30,000 US dollar trade I'm holding and call it a day, right? So if you are looking to get in, then you want to really zoom in a bit, but understand once again, the 12,800, highly competitive, but your account cannot hold it. If your account cannot hold it, you don't force a trade. You look at your life and you say, I can't trade indices. My account is small. I need to trade other things to grow my account. You don't tell yourself that I have to trade because it's going to go down and it's going to grow my account. I mean, guys, some of the things we do to ourselves psychologically is just silly. You can see why this was a perfect entry point that existed even before Powell said. You guys, if you do the course, you realize this order block was put in on the 22nd of August. Bearish engulfing pattern, fresh, everything that I've taught you in the course. And when Powell comes in on Friday, 4 days later, where were you? Where were you on Monday? Where were you when the war room was done on Sunday? You could have plotted this trade on Monday. It got triggered on Friday. You'd have made easy money, right? So now you're in trouble. If you have a very small account, you have to take the risk up here, right? The simple. Or leave NASDAQ 100 alone, because honestly speaking, for my rules, and people hate my rules, but my rules really do restrict traders, right? I'm a premium seller, premium buyer, nothing in between, right? So this is a high risk area. 1300 is a high risk area for a small account holder, and we really need to see markets turn around and come to you, right? One day they will, but they might come around at the wrong time. So just watch crypto, watch how crypto reacts, and then try your luck there if you want. But that's a high risk area. I'm not invested in getting it right with NASDAQ, because once again, I'm already in. I showed you my position. It's all over social media. Right, S&P 500, same situation. Look at this. Look at these zones that we drew weeks ago. Right, war room on NASDAQ, S&P 500. You think I'm lying? You think I'm lying? Go back to the channel. War room 74 on the 31st of July. Weeks ago, these yellow zones were drawn for where the daily prices came. And then all these extra area on the same printing, 22 August, all of them happen at the same time. US 30, guys, same thing. Same thing. Okay? Once again, I'm not going to waste too much time on this, right? You try your luck there with a small account, all the best. That's the H4 zone. On the daily, you're looking at a full contractual retracement, either here or somewhere up to there. Depends on your account, but I told you a while back, right? So S&P 500, I'm gonna move on because there's not much to break down. Today actually marks week 2 of my the third one in my family, my little brother, Safe My Siri, who I've just given him such an enormous task, and there's just no one better for the job than my blood brother, one of the youngest senior traders in the academy at the age of 19. He loves the synthetic indices. He's now in India, right? So we posted him in India. He's going to do a bit of studying there too. But for the most part, we are trying to re-strategize our global region. So once in a while, we'll be looking at Nifty 50, right? Just to start to familiarize myself with this market, right? Because, at the end of the day, you must really understand, the indices that will near best affect you. And so, I mean, I'm slowly but surely just studying Nifty 50. So I just brought it up here in the war room. Not much going on here, except for the fact that, I find this quite interesting. I don't like how the candlesticks are printed fundamentally due to lack of, flow order. So once in a while, when you switch to a Kinihashi, I still don't get, I get a better look, obviously, of price. And I'm just studying. I want you to know, I already looked at this chart yesterday, Saturday. So there really isn't a real opportunity for us right now in the market. Unless if you're a patterns trader and you're just betting on opening a lot of sells right now, to kind of like reach there, then that might be an option for you on Nifty 50. But personally, for me, I'm just still waiting for a very clean supply and just a clear understanding of what price wants to do. because, you know, unlike all my industry trades, I would want to see something like this happen. But, you know, with the gap down, blah, 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 it doesn't seem like I'll get that right now, and maybe this as well. So that's what I'll be looking to trade this week on the Nifty 50, just start to get a feel of this market, understand it, right? There's still a lot of studying I want to do on the Nifty 50. I traded this thing many years ago, many years ago, but it's now going to become part of my watch list, right? As I also kind of like familiarize myself all the way here in South Africa, what my blood brother has to deal with when he's up there, right? So we want to understand that market, we want to start to invest in that market, we want to see what makes up the Nifty 50, we want to understand a lot of things. And so if you've got a good broker like Headtrader, you can start to trade this stuff. So just to bring it to your awareness that I will be punting a lot of, you know, Nifty 50. But this to me seems like, you know, something you'd want to sell, personally speaking. Let's go to the governing time frame. It's a very interesting, strong asset, right? Strong, powerful, exploded during COVID 2020. That's fine. I drew a couple of fib levels, and now if it's a sell, you know, I would technically want to hold, right? So if we're talking about flow trading, I want to take that into a beautiful swing. At least up to that retracement zone. I do acknowledge that there's a cluster of buys here, and so I'm waiting to see. So I am going to enter Nifty 50, but honestly speaking, I am not giving back any type of money in the market. So it'll be very small lot sizes, just to kind of like get a sense of what's going on. And obviously, if the sell is extremely productive, you know, take profit one for me will definitely be there. Take profit two will be somewhere here. And then I'll have a blind swing where I break even, just in case we do clear this area out. But right now, there are not enough signs for me to know how far deep the thing is going to go. All right, so that's Nifty 50. You know, it's not a proper signal. I'm just letting you know that I'm starting to get very interested in this market as my little brother settles all the way there in India. What I am interested in, however, is the J225, the Nikkei, the Japanese index. Just so you know, guys, this thing correlates a lot with the Nasdaq. All right, so my last sell was here, it was closed, and then we opened another one here because of simply a higher supply. It had nothing to do with the Jackson Symposium. But if you think about it, remember there were those two big order blocks I showed you on Nasdaq and the S&P 500 on the 22nd of August. Remember, I kept showing you that on the H4 time from the 22nd of August, which was Monday. Was it Monday? I don't know when it was, Monday or Tuesday. But there was an order block though, the previous Friday. Let's just find out. Or the previous Friday, right? So markets closed with those order blocks, and markets made contact on the 22nd, Monday. They see markets created them on Monday. Markets mitigated those order blocks on the 26th. So the 22nd, S&P 500, Nasdaq 100 on the H4 area. There's a sell order block mitigated on Friday. Friday is where we normally sell stocks. I've seen this many times before on the channel. Right, so I just like the fact that this came just before, but even then there were like clusters of bearish engulfing patterns, and on Friday price continued, right? So I'm in the sell here only because this is what makes sense to my trading strategy much earlier. But you know, if you're taking those risky trades I've shown you on Nasdaq and S&P 500, a correlative trade is there on J225 as well, around the 600, you know, 2875. So come Monday, my job is to move my stop loss and put it above this area, and I might even go a very small risk with you in the zone here. All right, if you go to the H4 time frame, right, this is what you're dealing with. Right, this is what you're dealing with, and this is here. You see this there, 22nd of August. Correlation, is the first thing I want to look at. I love correlation markets, right? And so that's why this worked out very well. But this happened at midnight. This is listen. Powell speaks because of time zones to 8 p.m. South. I don't know, 2 p.m. whatever. But during the Asian session, markets get here first. This is during midnight. The Asian markets mitigate this order block first. This order block is also created at midnight, the Asian markets. If you go to my old classical free lectures, what time spreads, primary and secondary market, you'll know where I'm going with this, right? This is impactful news because this happened at 4 a.m. August the 22nd, right? Somewhere there. And then the London session gives us an imbalance. And on the 26th at midnight, This happens and then gives us the balance pre-Powell speech, and then markets rip up a new one. Let's go to NASDAQ real quick, man. This is again, it's going to get 100 views, and that's fine. But this is a really good war, right? Look at this. Asian session on the NASDAQ, right? This happened about 3 a.m. 3 hours later, that side it's midnight. I'm on the 4-hour time frame, and then at 11 a.m. when Powell is talking in the afternoon during the New York session, price rips. You're not hearing me still. If you're good with market correlations, there's specific charts that will tell you what's about to happen before it happens using supply or demand. I'll say it again. J225. Both order blocks were mitigated at midnight on the 22nd of August and on the 26th of August. When you come to the American stock market, because of the massive correlation between J225 and NASDAQ specifically, but also S&P 500, you will notice that there was the Asian order block created on the 22nd of August. That's the information you need. You don't need an oracle to tell you the future. You need to understand what happened before. So there are sell order blocks that were put in at midnight, was the Asian session on the 22nd of August. At midnight on the 26th of August, the J225 or the Japanese index is triggered. You're a London session trader like me, 9 a.m., or a New York session trader like me. You realize that, wait a minute, if J225 is really mitigated here, what's going to happen at 3 o'clock or 11 a.m. during the London session? It's up to you, man. If you're writing notes, you've got a good trading journal, all you have to do is write that down and go back test it. That's all you got to do. That's all you got to do. And so that tells me that the next time I take a trade here, I will first come to J225, see what's cooking, and then make sure I've got a correlative trade in the correlated London or New York session. Those who have ears have heard, those who have eyes have seen, and right now, this trade is actually doing quite well for me. I think I'm on a 1:1 or something like that. Oh, 1:2. I'm not even entirely sure. Yeah, well, okay, almost 1:2. So I'll definitely be moving my stop loss just above all this drama here, just to see if we can get some type of mitigation there at 28,600. And if that doesn't work out on J225, why would I think it's going to work out on the NASDAQ? Why would I think it'll work out on S&P 500? Clearly, market sentiment has changed for whatever reason. So I'll be watching that very carefully. I hope this helps you. USD Swiss franc, if it does, like the video. Please, don't be shy. Let's try and get the likes to correlate the views. I am begging you. Let's also try and get the subscriptions up, guys. It's not hard. This is good market information. I would love us to get to 1,000 subscribers, only so we can school the algorithm. Right, so we spoke about this zone many times. I don't know what to do with this nasty trade, to be honest with you. This is USD Swiss franc. All right, this area here was literally obliterated. All right, and we never got tagged there. I know a few senior traders did something crazy like this. I was not one of them, right? So this was a clean order block, which I either didn't see or completely ignored. I was waiting for a buy there. Then we spoke about this high risk zone, all these little demands in the zone here, right? And that's what we're holding, because this main demand on the daily completely removed. But this is not moving for me anyways right now. This is very choppy. I'm not enjoying it. I know at some point there'll be another impulse move, but it's too close to a supply. All right, so full disclosure, I want nothing to do with this trade. USD Swiss franc, I will be getting out fundamentally, because it's just not playing games, or playing according to a comfortable level. And right now, holding such a risky sell after a big demand like that has been taken up, for me, is high risk. But number one, also, there isn't a lot of trajectory, right, from that risky buy that we took in there, right? So if I clear out all the noise, what I'm saying is, where's price going to go? Because I've got a lot of supplies marked up, and we're literally sitting on top of another supply, because all these are bearish engulfing patterns, and not all of them will be equal. Sure, not all of them will work out, but honestly speaking, where do we expect it to go? All right, so this high risk zone that we spoke about, I explained to you why. You can see when I say a high risk, I mean it, man. Markets will break through. It's that glass effect, right, that Cyril was talking about. But to be honest with you, this trade, for me, has no prospects up, right? And we'll look at the dollar individually.
But just so you know, USD Swiss franc, this is a managing trade. I'm getting out. USD ZAR. I think I lost to this trade about maybe a month ago. I was trying to sell something and I got burned somewhere. Just can't remember where. Probably here. Probably here. Oh yeah, probably here. I wanted to sell here, and markets kind of like just right, and so I haven't been back ever since. And so I thought it would be time to come back to this area and then kind of like really reassess where we are, right? USD ZAR is very much in line with DXY, and so we always refer to the dollar index when looking at this type of charts because we want to make sure we understand. Now, major, prices going back to an MTP, right? Major tipping point. That's absolutely classical, right? Markets are moving as quickly as possible to this area of value here, which is the highest point in the chart price has ever been. Exchange rate between the American dollar and the South African rand. Inside this MTP is a major supply where order flows sell, right? We believe there's sell order flows here, but markets have to get to this rate of 17, right? And that's the other thing about 365, because our courses in US dollars, you really want to join now. I mean, it's weird. You got Forex traders who actually don't even understand Forex. They don't understand, the overall impact of the exchange, even on basic things, right? So it might cost you a little bit more in rands, right? Very soon if you don't hit that registration link soon. But the overall trajectory is 17,800, right? Where that's where we start to expect some little bit of sell pressure. But this is a buy profile asset, ladies and gentlemen. Do not be fooled. Every time ZAR makes a new major turning point, it will regroup and make a new one, regroup and make a new one, right? So it's always pushing to go higher and higher. And as long as the dollar itself has no steam, and that is as long as there are problems in the world and the DXY is a safe haven, please note that this will continue to happen. I absolutely believe that this will continue to happen. So let's do a multiple time frame analysis of weekly time frame. You can see we've got a strong bullish engulfing pattern, which probably smoked that. The sell I wanted to take was here, weeks back. It's actually a while back. Well, yeah, about a month or so ago, so about a couple of weeks ago. And I was actually smoked out of that area with more buy orders, right? And it was quite a silly trade. I did put it early on in the year. I posted on social medias where I thought, well, this would be an interesting place to kind of like, get a little bit of pips on the sell side. But really, we've known that the dollar is strong. So in retrospect, that was just kind of like stupid of me. And I own that. That was stupid. So I did get stopped out there. But I'm just, and the reason why I sold here was I was really hoping to get a low buy back there, right? That's the main reason. But as you can see, over time, we've missed out, lost money here, but not only lost money, didn't pay attention to the market. The market then converted to another bullish engulfing pattern, missed the part where this price literally came down into a demand. And this is interesting because you can see, even when you have profiling of your assets, what we teach in week 1 or 2 of the course, it's very important because you can have bearish engulfing patterns which signal selling. But if you don't understand the profile and the trend of the asset, that's just a trap. Right, literally get a strong bearish engulfing pattern that turns into a bullish engulfing pattern almost immediately, right? And then now, we're just competing for, for crumbs here. Here, we're just competing for crumbs, right? So I'm more inclined now to stare at this market, the closer I look at it. I am more inclined. There's really not a lot of leg way up, and because of that, there's not a lot of room for risk to reward, right? If I'm going to risk $1, I want to make 3, right? So this is what it looks like on the daily time frame. And like I said, I'm just struggling with this idea. I'm struggling with this idea of where to buy. So this would be maybe, just maybe on the daily time frame. Let's see what's happening here. Let's go Kini Hashi just for 2 seconds. Okay, no more candlesticks for 2 seconds. Right, so let's do a bullish engulfing, bullish Fibonacci. Maybe the rate drops to 1635-ish, then maybe we get in there. All right, but just be careful. I'm not that excited about this trade idea. We're very close to supplies, right? If you do your supply and demand curve, especially close to a major turning point, I can tell you right now, we're in that 75%, 100% where there's just a seller's camp in there.
So I'm not that excited about this trade, but for the sake of, you know, consistency, market rules, and all that kind of stuff, we really should have bought down here, or you know, or at least markets should have at least given us an entry point there, but they didn't. Then you're stuck with this zone. But be very careful. There's a buy order block just below as well, right there. There's a buy order block just below. So you could get triggered up here and your stop loss hit for price just to hit somewhere here and then go back up. All right, so just be very careful about that. Leroy, how would you mitigate that? Well, I wouldn't. I would use the power of capital and consistent trading. I could have 2 pending orders. Number one, risk separately and be okay with losing the first order to gain the second, right? Number two, I could drop down to like an H4 time frame and then really assess what's going on. And yeah, I'll stick to daily, man. I'll just stick to. So what I'm saying is, if you can afford it, you don't want to let price leave you, right? So this is one of the areas. But number one, but you can't have your stop loss this wide, right? Number one, it doesn't make sense. Number two, such a big area of value. I mean, what are you going to make, right? You want to make sure you get, you know, 1:3. And so if you're not like a bank or you're not banked up in your trading account, right, this is just dangerous. It's just too big. You're risking too much. And let's say you're holding until we get to the major trading point, just below 1:3. So I want to play smooth here, risk little or risk appropriately low, but also accept the chances of losing money on the zone. All right, that's 1:5. But bear in mind that there are many other supplies, even here by this red zone. There are many supplies inside here that I've marked up. There are many supplies before we even get to the red zone, the ones that stop price from going up right here. For example, a bearish engulfing pattern right there, There's just so much problem. And so then it really brings you down to 1:2. If this trade even works, that's a 1:2. But if it doesn't work, you know, you're even more screwed, and then you want to have maybe another pending order there. Now, the more I talk about this trade, the less excited I am for it. The less, like, Leroy, why are you even trying to force this thing? That's a 1:3 at the bottom, but I'm not sure. I really am not sure, right? So, you know, if you go H4, like I said earlier on, to me, there are not that many clear levels. Let's hope that we get inducement here, right? Let's hope that over time we see some support and resistance nonsense going on there, and then I'll reduce this area completely to look something like that instead. So this is the H4 turn daily, all right? And so I wouldn't trade here. I would literally just wait to see what happens in this area, right? And say, look, man, hopefully they can create some type of inducement zone or liquidity grab zone, whatever, and then hope for the best. So hope that markets come all the way into that H4 order block. And then you see now, buying here and even still exiting there gives you now 1:3. That's what I would do. But I don't like this chart at all, man. It's not that exciting. It's not the opportunity of the week. But if it plays out, you get to make money, right? USDNOK. And we also need to consult the DXY chart, you know, at some point in this forum, because we need to understand what the hell is going on with the dollar. Right? USDNOK is a market I haven't looked at in a long time. In a long time, right? So unfortunately, I thought I would be buying opportunities here, but we are finally back at a major turning point, right? That's currently engaged, and it is not a good idea to buy this. Even though it's a buy profile asset right now, no, I'm just moving on. Not even doing a multi-time analysis, I'm moving on. Doesn't matter. The most important thing about this forum was what I did earlier on. The teaching I did earlier on, that's going to keep you going. EURZAR. So it's interesting, right? Because we're looking for correlations in the markets, and I need to teach more on this all the time, right? So if I'm buying on USDZAR, I would like to buy pound ZAR and EURZAR. There's always generally called correlation based on the continuous weakness of exotic currencies, in this case the ZAR, right? So it's interesting that EURZAR is at a place to sell, and that's why I'm saying that USDZAR buy, be very careful, right? It's a lot of sell pressure here. I'll know this because we're in it, right? They're like, we are in it. Yes, we are. We spoke about EURZAR, pound ZAR, USDZAR weeks ago when we drew this zones. Pound ZAR, EURZAR, I wrote here 96% short, 4% long. War room number 71, the 12th of June. We marked out these zones. Anyways, we're in it, right? So, you know, there's this consolidation trap here, and finally this demand to me on the daily looked broken on Friday. All right, this looks removed, right? But there's so many other annoying levels on this chart. For example, there's this area here that technically speaking is what pushed us into that supply. But we're finally in a place, in my humble opinion, to kind of like lock profits, right? So, sell stops just above that area there should do us good. But what we really want to see in EURZAR, which is why, again, I keep warning, just be careful with that buy on USDZAR. But what would be nice is this, would be priced to kind of like remove the zone, and then we kind of come meet all the way down there. But it's going to take a lot of time, and it might not even happen, right? Because these are very strong currencies against a very weak rand. And as if the red is starting to slowly but surely accumulate some strength, right? This is the other thing that we are betting on, that we would like to see happen, only because to maintain the consistent profits that we have here on the charts, right? But if this area breaks, then either break up, or if you're scared and we've already done 1:3 on this particular chart, right? We've already done 1:3. Take profits, close the trade, take profits, all good in the house, take profits, right? So we're somewhere here, right? We'll come all the way there, that was 1:3, and then on Friday we bounce back up to 1:2.6. So if I were you, you should decide the type of trader you want to be, right? Long-term, medium-term type of swing trader, or you're in the process of just building your account. If you're building your account, I tell people all the time, make sure you get 1:3 and then start thinking of scaling out, right? So that you don't lose all that hard work. But for now, EURZAR is a watch game, because guys, we need to remove this demand at least before we can go down. Because this is a very nice area where markets have repeatedly been trapped a few times. I would like to see price break to the downside versus price break to the upside. But it does mess up the overall thesis, right? With this upward, trend line, we're still on the other side of the trend line, we're still honoring the supply, so only time will tell on EURZAR, right? But DXY, to give you guys a full context, remember last week I showed you guys what the dollar was in respect to the supplies. I did lots of screen grabs. I told you that, look, man, the supply is crazy. It's so well within the monthly supply, really high up, right? Knowing the dollar, this is something that it will easily break over time, and this is what's been happening. Like, look at this. Markets are printing multiple orders on a daily time frame in a very constructive big supply, which means a lot of buying and selling in a zone that's just strictly for selling, which is weakening the sellers over time. So I'll not be surprised if this breaks. If this breaks, then sure, those USDZAR buys will work, right? But we need to wait for it to break. I would like a retracement a little bit down. Remember, this white zone is the zone that I missed. That's why it's white. And that was actually the kissing of the weekly demand, the proximal line. And what I had done was I dug deeper to find a lower demand, and it was a missed opportunity. These are important. So look out for opportunities like this. When price does break the supply, not before. If it doesn't break the supply, I don't want anything to do with the zone. But if markets do successfully break this yellow zone and come back down there, it might be worth buying. All right, in the DXY. Okay, I told you, I'm moving on. Gold, XAUUSD. I mean, I did this chart for you guys on social media. Once again, check us out there on social media. I think I posted on Instagram, so please take the time to kind of like follow me on Instagram and just kind of like check the stuff out. But I told people, where's my other red arrow that I recently did? I lined up what the sentiment was in the markets, what retail traders are doing, looking for buys, blah blah blah. All this nonsense here, and then boom, Friday comes in, and gold pretty much looks like every other market, looks like Bitcoin, looks like Nasdaq, right? And so I'm worried for that, right? But if you're not in the higher sell that we spoke about, the cowboy sell or whatever, you really want to be careful. There's a little bit of buying activity down here, right? I wouldn't be surprised if we get some type of, retest and then we continue down. The whole green zone, however, is governing demand. That's what makes gold tricky for me. I don't want to sell inside the green zone, which means at some point this year, in the fourth financial quarter, I'm going to have to bow out of gold for a while. I'm going to have to bow out of gold while I wait for them to take out that area, right? At some point this year, because I'm definitely going to be wanting to hold a lot of sells in the green zone, unless if they are very low risk sells. But just so we're clear, with gold, I hope you know what to do. All right, one more time, because I feel I'm going a bit fast, but I don't want to make this war too long, right? So you want to look out for a play there, personally speaking, but you also want to make sure that this area of value here is dealt with, either weakened or completely removed, right? So the first touch has pushed price up, and you might get this on Monday. All right, or you might get this on Monday.
Okay, so I'll have those two pending orders, and then we'll see what gold does. But for me, I'm a seller in this market, not a buyer. NZD Swiss franc. Next chart. Remember, we drew this area here of inducement. I did tell you guys what's going to happen, and we wanted that bigger area of inducement up here, and markets to trigger there. Markets never got to hit our pending orders. Markets stayed at this PCP level, right? Look at this, right? This is very important. And then after everyone was stopped out with this, then we went down, and then I said we're really waiting for this. I generally would like to advise against buying. I would like to advise as quickly as possible. I would like to advise you against buying. And the reason for that is, all the signs on the macro levels, because price is fractal. Right? So I'm looking at daily, H4, weekly. It seems to me that markets are moving and going out of their ways to maintain some type of bearish print, right? So I want to quickly see the validity of this order block. Remember, today is the 28th of August, so there are about four days or so left into the month, which is when this candlestick will close, right? Monday, Tuesday, Wednesday, 3 days left, right, where this market will close. And if this market does close with a bearish engulfing pattern inside a governing demand, I want you to know it's going to be an interesting trade, because while there are many buy orders waiting to be activated here all the way from 2020, the sellers have already managed to push price down quite convincingly, right? And the existence of a bearish engulfing pattern here on the governing time frame might insist on pushing price down. And remember, NZD, like any other risk-sensitive asset, is selling right now: euro, pound, etc., etc. So it would make so much sense to almost carefully align ourselves with some sales, but also carefully, remember that we are at a very, very difficult part of the trading game, where we're now inside a big demand trying to sell, right? But now that this area is proven, useful by trapping traders to one side and smart money selling off, this is something that you want to watch out for first, right? That there. And then this has already been tested once, so definitely maintain this pending order in case you're wrong here. If we're wrong here, then I'm still going to wait all the way up there than anywhere else right now. But if you're to draw this area of value like that, you would see that this didn't really make it, right? So we've got a little bit of hope. So 1-2 zones for me for NZD Swiss franc is where I would park my sell orders. Next chart we should have done together with Bitcoin is Ethereum. I warned you guys in the last public Telegram public war room, that look, Ethereum's got a lot of good things going on for it. It's got a big merge coming up. But as long as sell side continues, right, all that things hopefully will be burnt out, drowned out. And I say this because Ethereum, I want Ethereum as cheap as day. I mean, if you think I'm excited about Bitcoin coming down to 12K, you have no idea how more excited I am about Ethereum. And I think if the Ethereum drop is more complicated. So if we can get that clarity in Ethereum dropping than Bitcoin, then anything is possible. Because like I say, we've got 3 days left, guys. There's one thing you need to consider about the markets. The other side of the coin on Bitcoin dropping all these levels. Both charts, Bitcoin and Ethereum, 3 days left for the month of August ends. And the Ethereum red candle is not big enough. It's not robust enough. It doesn't have enough, the type of depth of weak rejection. So I'm very worried about that. I'm very worried about, what that could mean. Because if this turns green or becomes a random doji, right, and not a convincing bear sign, then we're never going to get what we need. But if I could get Ethereum all the way down to, say, 631 US dollars, 500 US dollars, damn it, man, even three, I mean, all in. I'm literally going all in. Because all I have to do is hold it till all-time high. And that's a whole lot of property you can buy with that, right, if you invest the right amount. So just watch out for Ethereum. The governing time for Ethereum tells me that even though I want Bitcoin to drop to something like 12,000, that might not be easy given this structure. Right now, on the weekly time frame, when it comes to Ethereum, we can see for a fact that we do have a continuation of last week. So last week, on the 15th of August, when I started selling, Ethereum printed a bearish engulfing pattern on the weekly, which is like, great. That's all I needed to see. And then this week, markets have continued to drop, right? Markets have really continued to drop. And, we kind of like see that Bitcoin syndrome, where we get a bearish engulfing pattern,
you know, sometimes markets come back, but more sometimes markets don't come back. And what I'd love to see is some type of comeback into these zones. That's what I would love to see. And obviously, just make sure you come out there, because then this is where, you know, where SP 500, all those bear market signals, 20% drop in the stocks market. This is where crypto was. And so if we can clear these lows here, then we'll go. If Ethereum can go a little slightly below $1,000 US, I think that will create a lot of retail capitulation, a lot of pressure to the downside, right? And that's a big trade idea, I know. But like I keep saying, there might be something big happening this week in crypto that might actually push all these prices really down. And I hope to make a video in time for you to watch that, right? But yeah, let me not ruin it. Let's see if we can get there, right? AUD USD, you know, life is tough, man. Life is tough. I personally was not triggered. I don't know if anyone was. I personally was not triggered. I don't know if anyone was, right? Markets literally turned just outside our areas of value. And you know, the trick to this stuff is to always kind of like also double check your Kinihashi. And I saw a doji area, so I thought that would be a good place to put my proximal line, my entry point line. But no, markets turned just before, right? This is normal, right? If you're patient enough, you might actually be an inducement zone. So don't